So this is the case of maybe something bad is about to happen or happening in that building company in this example. And he's like, I need to get someone else who's going to be the scapegoat. Is that an appropriate word to use? Or the fall girl in this case?
Yeah.
Hello and welcome to another episode of the Money Matters podcast. This is PJ Patterson, founder and CEO of Intrepid Wealth. I am joined again by Melissa Kuterich, who's the founder of Diva Enterprises. Welcome back, Melissa.
Thank you.
Always good to have you here on this show to talk about all things coercion. And
the dark side.
It's the dark side, that's right. And talking with Melissa about the dark reality of coerced directorships. Melissa, what does that mean? What is a coerced directorship?
It's when you've been placed as a nominated director of a company, especially when it's gone south and it's about to collapse. Mm-hmm. So it's done in a very timely manner so that it meets the procedural protocol. That's the best way to explain it. And it's generally done without your consent or without thorough explanation or understanding of your obligations or what is about to happen to you.
So that sounds pretty serious, and I want to get into an example of this. So give me just a sort of a generic example that the average person on the street can relate to. So what might that be? I'll set it up. Maybe a husband and wife.
Yes, I can give you a personal experience. But in a relationship, the husband may have been a director of a company and it's been going along and run by him and his staff and whoever else. The wife doesn't have much to do with it, doesn't have access to the financials or the daily running of it. However, he has then gone to an accountant or someone who has introduced an insolvency practitioner.
Let's pare it back though from that for 1 second. So this would just be a simple example of a husband and wife. Wife's on as a director.
Please cut that. I'm smiling and laughing.
The thing I want to be careful of is getting too deep in the weeds too quick. Good. Right.
Okay.
So I'm trying to set this up for the average punter who's like, why do I care about coerced? What does this even mean for me?
Okay.
So
let me start over.
Okay. No, that's okay. We'll just edit that stuff out. So we'll pause. Speaking about corporate directorships and nominated directors in a husband and wife situation, I'll set a scenario for you. Let's take a builder as an example, right? He has a building company. I know, they are your favorite people. So we have a guy who owns a building company, and he puts his wife on the building company as the director and comes home one day and says, honey, I need you to sign all this stuff. You're going to be the director of my building company. That sounds really flash and really exciting for her. Ooh, I'm the director of the company. I'm his boss, right? Could there be another reason why he might be doing that?
100%. And
what would that be?
That would be to avoid any kind of prosecution, any kind of let's just say penalties, let's just say any kind of bankruptcy that may go on.
So how would he do that? I mean, what does it mean to be a director of a company? Maybe we should start with that. So wife is director of the company. How serious is that?
Well, she is... Sorry. She's responsible for that company. She's responsible for every element of regulation, legislation, finance, tax, everything.
So let's drill into that for a second, because that sounds pretty serious. So she is, for all intents and purposes, not even all intents and purposes, as the director under the Corpse Act of 2001, I believe, that's when they brought it in. She has a lot of responsibilities, a role, reporting duties, all sorts of stuff she has to comply to. And yet, hubby's just walked in and said, you're going to be the director of the company, I just need you to sign these ASIC forms or these forms.
Exactly.
But doesn't tell her about all that other stuff. Why is that bad for her?
Because she has no knowledge of how it's been run. She has no knowledge of the financial implications, any debts that have occurred. She has no knowledge of any operation whatsoever. And whilst he may say one thing, that it's all legitimate, it's fine, it's not going to affect you in any way, it will. So there's that case. Or there's a case where he's in problems, he realizes the severity of those problems, he will approach his wife, his partner, he will basically tell her that she is now, or they are now potentially going to lose their home, and they are potentially liable for significant amount of debt. And the only way that this can actually be saved is by her being a director. He will then remove himself in a timely fashion. She will take the fall, and because he is the breadwinner, apparently, the ramifications on her are less than it would be on him, and he will ensure that they don't lose their house.
That's the story he's telling.
That's exactly the story.
So he walks in with that story and says, so this is the case of maybe something bad is about to happen or happening in that building company in this example. And he's like, I need to get someone else who's going to be the scapegoat. Is that an appropriate word to use? Or the fall girl in this case,
yeah, the
right?
fall girl.
Yeah. And the rationale behind someone doing this is what? So why would you do that? Put everything, say, in the wife's name and responsibility. Why would someone do that? Because presumably they're married and they'd have joint assets and stuff. How does that actually, it's bad for her, I think we've established that, but how does that maybe protect him?
See, I could go into so many avenues of coercion now, especially the manipulation when it comes to removing certain assets and moving things. But anyway, it protects him so that he could actually re-establish himself into another entity and continue doing what he does. It also protects him from creditors.
Even though he was a director of the company, up until a certain point, had those responsibilities, then puts all that in now the wife's name. She's now the sole director. Asset creditors don't care. They don't pursue him. They just pursue her.
Basically, but it's done in a very timely manner. So I believe once upon a time it used to be 9 months prior.
And when you say timely manner, so there is a specific window of time that typically people will do this
Yes.
before the poo hits the fan and they blow up the company or Phoenix it or whatever.
Yes.
And that is because the time limit, or the time 9 months you said, what does that mean?
Well, it means that during that window, that director was actually responsible for whatever would have occurred at the time of the collapse.
So what it's doing is it's an establishing a responsibility, direct line to responsibility.
Yes.
Okay. That's bad. That doesn't sound very good. So I think the thing to sort of hit on there is that, is it fair to say then, if you're asked by your partner, husband, even wife, I suppose, to go on as a sole director of a company that maybe I was the director of previously, that you might not know the full extent of the liability that you're about to embark on? And you should ask some questions?
It's not so much asking questions. There are many women that do ask the questions, but asking for actual evidence and documentation, that's another thing. And when you're in a relationship, it makes it difficult, and none of us want confrontation at the end of the day. It can get very heated as well. So it's not a matter of just asking questions. It's a matter of asking for the actual documentation and hoping that you are going to receive that documentation. But yes, women tend to go into these things without asking, without really knowing what's gone on, and listening and believing to the story they're being told. And then there's that the underlining threat of, we're going to lose our home. there's the underlining threat of what else can we lose? And then you've got children. Most of the times the kids go to a private school. They've lived a certain lifestyle. And even if they haven't, they've lived a certain lifestyle, and it's that threat of losing everything. But the guilt that is placed on the partner to actually agree to this, and then you want me to get dark, even though I'm smiling.
Mm-hmm.
The other side of this is that women can be placed as directors without even knowing.
Without knowing that they're the director of a company. Okay,
Until
well, that
it's
sounds
late.
interesting. How does that happen?
That happens when... You told me not to go into professionals.
No, that's okay. They're
happens.
enabled by someone. So obviously we're talking about how this affects people in their personal side of things, right? Being put into directorships. So how does it happen?
It is. It's enabled by a cohort of professionals. And generally, what I found through experience is that most of these professionals, they all benefit. So everyone's clipping the ticket along the way.
So what professional would do that to start with? Is it the accountant?
Tax agent, accountant,
Okay.
anyone that has access to making lodgements.
Yep, on the ASIC website and so forth.
Yep.
So they do this, and I want to drill into how is it that they can do it without someone signing a document, for example. How's that work? They just put them on as a director.
Let's just say that you can, because you are a professional, you're actually putting yourself down that you've made this submission. Now, the couple, you've also done her taxes as well. So you've got all the acknowledgements, the engagement letter, hopefully, because there's situations where the woman doesn't even engage. But you've got all of that, so you're covered. The waiver's been signed.
And so when you say waiver, what waiver are you talking about?
So there is generally a disclosure down the bottom, or a waiver as I call it, that states that the information, that anything that's been instructed is based on the information you provide.
This is in like an engagement letter.
Yes.
That an accountant would get their client to sign. And are you saying that engagement letter gives the accountant sort of carte blanche to do things on behalf of that client?
It's like a veil of protection, I call it.
Okay. Now, you'd hope that most accountants, if they were presented with a case like this from their client, would ask some questions and maybe go to the point of, would go to the point of calling up the wife and going, hey, do you know that your husband wants to put you on as a director, and do you understand what that means?
Yeah.
Unfortunately, that doesn't happen all the time. It's probably a small % of cases, I hope.
I always go 80-20 rule, but...
Okay, well, that's fine. Well, 20% is still a small % of cases, but it's 20% too many, I suppose, in the grand scheme of things. But the point is that most professionals are going to act professionally around this. But for the ones that don't, they might put that partner wife on as a director. She's not aware of it until what? Someone shows up at the door? A letter comes in the mail?
She's not aware of it until the day that it's gone into insolvency.
And how do you know that that's happened?
Because she will get notified.
By the insolvency practitioner.
That's right. And generally, that's been done, and then come the explanations of how did that happen, what just happened. And again, it's that threat, that explanation of, well, I'm the breadwinner. If we're going to keep our home, I can reestablish, and they'll go into this whole explanation of why it's beneficial and why she's got nothing to concern herself. And then there was I'd like to call it a bullet, that says that the law will be lenient with you because you're a woman.
This is a... What?
Sorry.
Something
that was an explanation that was given to a woman that ended up agreeing even when she was given the opportunity to speak to someone individually to let them know what had occurred. So that's where I call it the bullet of silence. But it makes it very, very difficult because, as you know, it's so hard to undo a signed document. And she may have signed a document with that tax agent when they first started jointly together, and it will appear that she's agreed along the way for everything, which she hasn't. So that's where I say this is such a concealed trap, and it's weaponized in a way that you don't have any standing. I'd like to go back to our whistleblower. But as I said, it can be done quite easily, and then you would be going back and accusing a professional to say, well, you've actually backdated a document. That didn't happen on that day. And documents have been backdated. The forms to remove office holders or make changes have been backdated. And it's very, very hard then to prove your point or make a case out of it to say, no, this didn't happen.
I think it's worth pausing here for a moment because there's a lot in all of this to unpack. And for anyone that's listening to this and might be wondering, first of all, am I a director of any of my husband's companies, or have I been put on as a director? How can that person check?
Go onto the ASICS portal.
And do what?
You do a search.
Company search.
You do a company search, or you could even do a name search. But you would check.
And the company search or the name search will show you who the directors of the company are, shareholders, and the such like.
Yes, and then you can, if there is something on there, you can actually go to the documents that have been submitted. It does cost us a fee, but you can actually request that document and you can see when it was actually done. So I don't know if you want me to say this, but we have a course that we do, or a workshop that we do for women.
Great.
Lipstick strategies. And basically all that does, it's just the Corporations Act simplified, and then examples given as to what to look out for, where to search, what to ask, and also how to request documents and also make inquiries into ASICS, ATO, and all the relevant bodies.
Now, if I'm not, so that's Lipstick Strategies. What's the name of the course?
That's it.
Lipstick Strategies is the name of the course. Diva Financial Lipstick Strategies. I love it. The other thing you can do, I believe, is you can also subscribe to the Credit Watch with Experian.
100%.
And that will notify you if you pay, I think it's $20 a month or $120 a year or something. It's very inexpensive for what it is, and it warns you if someone has touched your credit file, and it will specifically warn you if you've been added or removed as a director on something. So would that be a resource maybe to also have?
Yeah, we
running?
also have Equifax do the same thing.
Equifax, that's the name of the company that I was thinking of. Yeah.
Yeah, so you can actually do the membership, and anything that happens, you get alerted. And that's the safest way for you to keep track of things.
Great level of protection. I mean, I have the Equifax thing for me, and occasionally I see, a notification come through, and it might be, someone's checked your credit file or something like that. But it's a good early warning system for maybe somebody, even fraud, is trying to steal your identity, for example. So
it's the best thing.
It is. It's very good. Okay, that's fantastic. So what are the ramifications? Now we were talking about when that letter shows up from the insolvency practitioner. It sounds like they will have no mercy on the woman because she's a woman, despite the advice of that person who said they'll be lenient. No leniency because they don't care whether you're a man or a woman. You are the director. So let's go dark. Like, what are some of the really bad things that you've seen happen in situations like this?
You're wanting to go dark? I'm impressed. Okay. There has been a number of situations where the woman has found herself having to, one, defend actions within the court because a insolvency practitioner has been appointed by a creditor. So I always say there's no such thing as a friendly practitioner, although some will question that and say that's wrong because they are always directed to friendly administrators. They would end up having to provide the documents, the financials, all the books and records and everything else. They can't provide these. It is a penalty. You could be then put under public examination as well, which means that it's basically going on trial for things that you have no idea about because you never ran the company. Defending yourself against this kind of nominated directorship can even lead to jail, and depends on the severity, obviously. Most of the time, so if we're looking at generally what happens, which is why for a long time women have been told that it's easier to place you there than me to take the fall, is because that is noted on her report, on her credit worthiness. It's noted on her report and it's not removed. Regardless of the time frame, it is not removed. She's nominated as a director of a liquidated entity. It is very clear, even in the submitted documents, which the reports are given by the insolvency practitioner, those reports aren't favourable to her. So her chances of building or rebuilding a life after something like that is so difficult, so challenging. So they're the worst cases, but what I've just explained to you, that's the norm. The norm is that you've got a report on your name listed as a director of a failed company, and you can't get that removed. And every single time you've got to go and explain it, it's like the boy who cried wolf. You're not believed. Let's just say you've had a lifestyle that is affluent. No one believes you that you didn't know what was going on. And most of those times, the woman actually didn't. So
because she's being told the whole time by hubby or whomever, everything's okay, under control, nothing to see here, you don't have to worry about this, I've got it.
Yeah. And most of the time you actually do believe that. And when it's explained to you, it sounds so complex that you think, I don't have the headspace for this. And you trust. So that's basically it in a nutshell. But the ramifications, that stigma stays around forever.
And I'm assuming that if it goes to the really dark place and this happens, something bad happens, relationship breaks down, divorce happens, and as you say, the wife then tries to go, now ex-wife tries to go and rebuild, forget about it. Probably not going to happen. No, won't be able to get a bank loan, probably struggle to get a credit card. That stigma and that is going to follow you around forever, it sounds like. Can't be removed from the credit file or won't be removed from the credit file. Doesn't drop off after 10 years even. It stays there in perpetuity.
Anyone can dig it up.
Sure. So, okay, well, that's pretty serious. And that, hopefully, for anyone listening to this who is thinking maybe I am a director of one of my family entities or something like that, and I'm not really sure what's going on, might want to do some further digging on that and ask some questions. So let's flip it around to empower some people now. What should they be doing if they are thinking that thought?
Oh, start investigating.
Okay, with what? What do you start with?
First thing is ASICs.
So the company search or
Company
even pull a credit
search.
file?
Company search, exactly what we were saying earlier on. Definitely look at somehow getting that membership with Equifax, being alerted so that you know what actually comes on and what's been happening with your name, your identity, who's used it, how it's being used. ASICs, do your searches. You can go to a trusted accountant, go to an individual tax agent, get them to have a look. Get the InfoTrack searches done. That will give you, the whole relationship of where your name is being used and how it's being used. Definitely.
So just on that, lots of professionals can help you with that. Your lawyer could, your finance broker can help you, your accountant can help you run those searches.
100%.
Your financial planner, if you have one, would do that. So there's a lot of places to go. There's a lot of places you can go to get some help if you're not sure how to do this, because I've been on the ASIC website many, many times, and it still bamboozles me. And I've been working with ASIC for over 20 years. So I can only imagine someone, going, oh, I need to do a company search. How do you do that? So there are people that will help you do this.
100%. But all I'm going to say is when it comes to these type of situations, if you've got any kind of inclination that something just is not right, go to an independent person. It's not a matter of going to a friend that's, family friend. Go to an independent person. Let them know. They will help you. And that's the best way, because you can go to the cohort that you usually do.
The family accountant.
They may sometimes not even know exactly what the agenda has been. They've just listened to instructions. So, it goes both ways. And I'm not saying that everyone out there is colourful. I prefer that word. It's a matter of you don't suspect it sometimes. And you form that relationship. So it doesn't even come into your mind that this is going on. So go to an independent. Don't stick to what you've been told and what you've known.
I think that's a great way to finish this topic for now, and that is, when in doubt or you're unsure, go to someone who is unfamiliar with your situation, ask them to give you some help, and see where that leads you to. Melissa, thank you for talking with me about nominated directorships and the potential problems and pitfalls with that and the hidden coercion in all of it. I'm PJ Patterson of the Money Matters Podcast. Thanks for joining us.
Thank you.